What's up, everybody? Welcome to another morning coffee with Mike. Today we are talking about growing an account, and not just growing an account to half a mil. And I'm going to share with you the steps that I took to do this back when I was trading part time. I was trading part time for many, many years. If you've read my story in the Trading Mind Wheel, or if you've been following along on these posts, you know that I struggled for a very long time. I struggled for the first 10 years of my trading, and it wasn't until I finally got around some good people that were able to guide me and get some good knowledge that I was finally able to turn the corner. And I started to turn the corner really in 2010, 2011. Now, the importance of compounding. Well, let's start there. Compounding is really the magic sauce that can allow you to have these big returns and to eventually be able to leave day job behind if that's what you want to do, have financial freedom if that's what you're after, and to grow your money. And I assume that everybody that's listening to this is all interested in at least growing your money. So, how do you do that? How do we do that? The first thing in growing your account, the first step in being able to achieve these kinds of returns, and the returns are actually pretty realistic. And it's even realistic if you are somebody that's not going to be very involved. And I'll show you precisely how. The key thing is consistency. And I'm not just talking about trading consistency. I'm not just talking about you going and executing your trading plans. What I'm talking about is contributing to your trading account consistently. How is this thing going to grow if you're not continuously putting more money into it? Think about if you were to plant a garden. You put one tomato plant. That's it. Just one tomato plant, and you're going to hope to eat and feed your family. Not going to have too much food, even if that one tomato plant does extremely well. What you're going to need to do is plant other tomato plants. Maybe you plant some lettuce, maybe you plant some cucumbers, and then you could start to have your nice salad. Where in the heck am I going with this? Where I'm going with this is that it's in consistently putting more money into your account that it can start to grow and it can start to compound more so over time. You know what? While I show you with an example, let me share my screen. I'm going to first share it over here on on YouTube and LinkedIn and all these other places here. Let's see, share the entire screen, share screen number three. I've got too many screens over here, six screens. Okay, so now it's being shared over here. Move Instagram over and let me know if you're able to see this. Over here, we've got an annual return compounded. Over here, we've got the NASDAQ return compounded. And let me copy this, or I'll put insert column over here. And let's just copy this over here. So that way you guys over here on Instagram can see the year. So starting from 2011, right? Because we started this conversation from my personal journey and how you would be able to do something similar yourself if you followed a similar path. So going from 2011, when I finally started to turn the corner in my trading, to when I finally left the day job behind in 2018. So by 2011, I was able to save up about 100 grand between myself and my girlfriend then, spouse now, able to save up about this much. So starting with 100, right? 100's not going to grow only by itself. In fact, why don't we just quickly change the numbers here and see what would happen if we changed the numbers to just 100, right? So each year it's 100. And let's say that we are going to add just the number here, right? We're not contributing to it at all. If we don't contribute it to it at all, we're only going to end up with about 300 grand by in 8 years by 2018. Not bad when you think about it, right? You tripled your money 8 years. You're getting Nasdaq returns, right? So this is assuming that you just took your money, put it into the Nasdaq, and you can do this. You could go and there's an ETF called the QQQ that closely mirrors the Nasdaq. Pretty close. It looks at the top 100 stocks in the Nasdaq, so you get pretty close return. So if you're doing that, if you had 100 grand and you put it in 2011 and you got the Nasdaq returns, you would have ended up with about 300 grand. Not too bad. Let's say that instead you started with 100 grand, and each year, if you look at the little formula bar over here, each year you're not just taking the return, you're also contributing another $10,000 per year to this. Let's say that you're making a six-figure salary, right? And at the time I would take 10% of my salary, put it into the market. So by doing that each year, just by following the Nasdaq's return, you would have been able to get to $411,000. You would have made four times your money. You would have had a four bagger in this way. Pretty good, right? But you know what? That's just from the NASDAQ return. We're looking for better than that if we are going to be trading the market. And the thing with trading is that it takes time. Let me put this back over here and make my face bigger over here on YouTube and all these other spots. So the thing with trading is that it takes time to learn. And you're not going to be able to get to bigger returns than the market right off the hop. You're not going to be able to just read one book. You're not just going to be able to read my book. You're not just going to be able to read O'Neill's book and all the other books that I shared with you yesterday and expect to be able to beat this. It's going to take more than just reading. It's going to take time. It's going to take experience. It's going to take you getting your hands dirty and learning some lessons the hard way. We're going to be able to help you avoid a lot of those lessons by learning the right types of things, but you're still going to be making mistakes. I still make mistakes. Making mistakes is okay. What's not okay is not learning from our mistakes. We need to continuously learn. We need to continuously improve. That's the purpose of all the book learning. That's the purpose of you being here. That's the purpose of YouTube videos. That's the purpose of coaching and mentoring. Being willing to go out and fail. And as Tim Kennedy said, fail rapidly. Tim Kennedy was a UFC fighter. He was trying to get to the point of failure fast, so that way he would be able to learn and be able to improve. Guy was a world champion. Guy went on to be later left the UFC to be a ranger in the U.S. Army. We want to be able to fail and fail well. When you are looking at returns like this here, I'll share this again and bring you guys back over here on Instagram. Take a look. Right? So if you want to improve these numbers, You're not going to be able to improve them overnight. What's going to happen when you first start to trade is that you'll probably be doing worse than the market. And that can be discouraging, especially if you are taking too large of your account and putting it in. And not only that, expecting to outperform this in your first year, in your second year, in your third year. There's a learning curve, even with reading the right books, even with the coaching and the mentoring. Think about it. You probably have gone uh, to school, right? Most of you have probably gone to at least your regular school grades up to 12 if you're in the US. Many of you have probably gone off and pursued other education too. I have a bachelor's degree and a master's degree. The expectation when you leave these institutions too, after you've gotten your degrees, is that you still need to go off and get and learn and get more experience when you're in your day jobs or whatever it is that you're going to do. You're not an instant expert in anything until you have the real experience. The same thing is going to apply with trading. You still need to learn and get your hands dirty. And if you're expecting to beat the market right away, then that's a poor expectation. It's possible, but it's a poor expectation. You need to give yourself time. Here's what can happen once you do, right? So let's take a look at this over here. Just adjusting the camera for Instagram. You guys over here on YouTube, Facebook, LinkedIn, Twitter can still see it. So we are taking a look at these returns here. So this is just assuming a 20% annual return every single year. And with a 20% average annual return every single year, and this is also with contributing 10 grand per year each year, you end up dramatically outperforming the NASDAQ, even though there were a few years in here, like let's say 2017, uh, you would have underperformed. Back here in 2013, you would have underperformed with a 20% return. But compounded out, you end up close to 6 to 1 return on your money versus 4 to 1 by just going with the market returns. That's where compounding and continuous education really start to work in your favor. It's not about becoming profitable tomorrow. It's not about putting money in and expecting an immediate return and then pulling that money out and then going off and doing whatever with it. We need the compounding effect to be able to grow the capital, to be able to get to a point of financial freedom. And why 2018? What's the magic well with 2018? So I'm in this camp over here, right? The numbers were close to this here. When I left the day job in 2018, we had about half a mil combined in the account, and so it was from there that we were able to look at the account. Right. Well, let's switch this back over to look at me. I'll get you guys over here on YouTube back up. So in 2018, when I was kind of getting fed up, not only just getting fed up with the day job, some things that were going on over there, but it was really understanding that what I'm doing right now, this is a life's calling. Super strong, interested in the market, doing well, helping other people with it, being very passionate about it, wanting to do more. I was able to do all that stuff part-time or a bit of it part-time, but there's a lot more that I'm able to do now that I'm all in on coaching and mentoring and writing books and doing all these kinds the speaking engagements, all these things. Even with that amount in the bank, it's still scary. It's still scary uh, to leave, and it was scary at the time. So here's some of the thought process that Melissa and I had. Melissa's my wife. Had in 2018 because at the time she wasn't working either. So we took a look at our finances, right? That's an important thing when you're thinking about leaving a source of income for yourself and pursuing another, especially one like this where it's not a guaranteed paycheck that's coming in or well guaranteed that's an interesting term in itself, but we'll table that for now. Let's say, right, you're moving from an income that you have relied on to an income that could be sporadic. You don't know if you're going to have a great market year. You don't know if you're going to enter into a bear market. As far as a business goes, you don't know if it's going to take off or if it's going to flop. There's a great amount of risk involved. So considering all those things, right? And plus having a newborn, right? Oh, in 2018, my daughter was 3. Thinking about all these things, oh, should we should we pursue this? So we looked at what we had in the account, that half mil, and what we did was we took a look at, well, what are our living expenses? How much is the mortgage? How much are our utilities? How much is it for food? How much is it for daycare? How much is it for uh, all the types of living expenses that you could think of per month? And how long could we live with if $0 came in? Fortunately, we are not frugal, but we live comfortably, but well, we're not ultra extravagant. We figured out that we would be able to live on roughly 50 to 60 grand per year, right? Like not including taxes. So from there, we were able to look at, okay, but now that we've got our expenses figured out and our living expenses figured out, if not a single dollar comes in, we could survive for between 8 and 10 years. That gave a huge level of confidence to say, you know what? Time to leave the day job behind, go pursue what I'm passionate about, and make this a reality. Still super scary, right? Because again, market can fluctuate. You don't know if the business is actually going to take off. Uh, Many unforeseen variables when you're starting business. For you guys that are watching this, if you're thinking about starting business, if you're thinking about going off and trading for a living, it, there's a lot of challenges that are involved. I've already listed off a few, and that's with having 8 to 10 years of expenses paid for. Imagine if you don't have that. Well, let's say that you've got 3 months of living wages. Let's say that you've got a year. Let's say that you've got 2 years. There's a certain stress that comes with having to make trades work. You want to avoid that as much as you can. Depending on where you're at in your life, you'll be able to figure out what level of that kind of risk you're comfortable with, right? There's all different kinds of risk. There's that kind of risk. There's also the kind of risk where you put on a trade and the amount of capital that's at risk. Well, what we're talking about is the risk of trading or your business not working out, the stress of the and the risk of the unforeseen, and trying to plan for those types of things ahead of time. I think that it's important to recognize too, and one of the reasons why I'm sharing all this with you is that I still had those levels of stress, the doubts were all still there, even with 8 years at that point of consistent success in trading, even with having built up significant capital. Thoughts, fears, doubts can all creep in, and it's up to us to continuously work on our mindsets, our beliefs, all the things that are going to strengthen uh, our mindset, our skills. Thankfully, I did all those things, and that's why I'm here. You can too. And the important thing for you to do to be able to generate these kinds of returns, and again, I'll show you the spreadsheet here, especially for those of you that are just tapping in, right? So this is the Nasdaq's return over 8 years, compounded out. If you started with a 100 grand and you just added 10 grand each year, same thing over here with, but if you had a 20% annual return, the thing to do is to contribute to the account and to keep on contributing. Don't stop contributing. Let's take some questions. Let's take some questions. Right? Let's see what questions are coming in here. Fidelis, question from Facebook. Welcome, Fidelis. You're the first person to come in from Facebook, at least in a hot minute. So Fidelis asks, is there any free platform for backtesting? The free platform for backtesting that I use, and it's funny that you ask about backtesting. I'm posting a lot about backtesting from the Trading Mind Wheel virtual conference that we just had. The type of backtesting that I like to do, and how my friend Akil Stokes, who talks a lot about backtesting too, likes to do, is manual backtesting. So, for example, if we have a system or a strategy or some if we're working from a baseline and we want to go do a test, we want to actually go and feel how this trade would have played out. So if you are using some kind of software to backtest and you say, oh, I want to backtest this strategy over 1,000 trades, and you get a result, that's wonderful, but you're not getting the feel, you're not getting the experience of any of that. So it's actually far more advantageous to do a manual backtest. Grab a spreadsheet, start with a Google Sheet. That's what I do. Uh, the way that I like to test things now is I like to take a look at my past results, and I will test things from there. I'll also run tests on quote unquote model stocks. Well, what's a model stock? A model stock for me is the type of stock that's run up several hundred, several thousand%, and then seeing from there, okay, what was so great about this thing that allowed it to make that kind of move? What were the fundamental qualities of it? What were the technical qualities of it? Where would I have entered this thing given the types of setups that I'm interested in? Are there other ways to have entered this thing and to take advantage of it? Asking ourselves these types of questions and logging the results in a spreadsheet, that's a great way to do back testing, is super helpful. And not only is it super helpful to do it in that way, using a spreadsheet, you're creating a log for yourself, and you'll be able to run various stats over that spreadsheet, run pivot tables. Yes, it is a lot of work up front, but later on, as it's built, you've got a database that you're able to work with and run different scenarios over, and it becomes an invaluable gold mine for you. So that would be my advice, and you could do that for free. Let's see, what other questions you guys have? Just scroll through Instagram here for a minute. What are the best values that indicates that a strategy is a winning strategy in terms of profit factor and drawdown? So you would want to see how that system performs over many, many trades. And so if you're finding a system, right? So let's say that you're modeling a system, you would want that system to already have loads of experience. So like uh, hundreds or thousands of trades in that system, right? But let's say that you are coming up with your own system, you're coming up with your own idea, and you want to test this thing out. So what I would do would be to start to test the idea and see, well, what's the performance of this idea? I get through 20 trades. What's the performance of this? If the performance over 20 trades is absolute crap, then great. I know already that that's unacceptable. I'm going to toss this, start fresh, start with something else. If over 20 trades I have very good results, then great. I can continue to test. And the idea is to get to 100 trades of this kind of testing, and then you'll start to have statistical significance when you get to that level. Of course, there's a bit more to it than that. You're also going to need to have you're going to need to have multiple market cycles within your test. So what does that mean? You want to have your system see how your system operates in bull markets and bear markets and sideways choppy markets. You want to see how it performs in different conditions so that way you know what to expect. Factor in all those things, and then that's what is going to let you know if your strategy is a winning strategy or not. Winning has far more to do than with just what's the win rate or what's the uh, reward to risk. Part of it's going to be, can you operate the system that you've come up with? There's plenty of styles, right? So now we're shifting over to stylistic. Uh, there's different people that are able to tolerate big drawdowns to hold for bigger moves. They're able to tolerate giving back a large portion of their gain for a much bigger move. Bill O'Neill was able to do that. We've spoken about Bill, who passed away last week, a number of times. He was able to tolerate drawdowns or being able to give back. And that doesn't mean that he didn't cut losses. He cut losses religiously 78%. But if on a winning trade, if he got a winning trade that started to move, he was able to sit through bases to hold for a much bigger move. Not everyone's able to do that. Some people like to have a lot of wins and are willing to take much smaller wins. That's going to be different for everyone, and we need to figure out ourselves. That's why the first thing that I talk about in my book, The Trading Mind Wheel, is all about beliefs and all about mindset. Anyhow, looks like we are out of time. So I want to say thank you all so much for joining me today. It's been a real pleasure. And I will see you back here tomorrow at 11 a.m., slightly different time, 11 a.m. Eastern time tomorrow, Thursday. And I'll see you there. Take care. Much love. Peace out, everybody.